Hey there, Singaporean investors. Many apologies for missing out on 2 weeks of daily market news digest as I was traveling in New York. Things are really expensive in New York, so I am happy to be back in affordable Asia. Tired of sifting through endless news trying to figure out what truly matters for an SGX portfolio? Welcome to the Investing Iguana's daily SGX market digest for Friday, September 26th, 2025. In the next few minutes, here are the critical updates, hidden insights, and what they mean for money on the SGX today. The Investing Iguana was ranked 8th in the 2024 Influential Tigers by Tiger Brokers, crossed 1 million total reads and 58,000 likes, and published over 1,000 videos with 600,000 plus watch hours as of August 2025, with a focus on regional and global macro to frame the SGX moves with context. The Straits Times Index closed yesterday at 4,273.86, down 0.39%, as local shares tracked regional softness amid valuation jitters and a cautious tone from U.S. markets. Early trade today was flattish to slightly positive around 4,276, suggesting a stabilizing open after the dip. Regional and U.S. leads stayed mixed, with headlines around lofty valuations, Fed path uncertainty, and AI positioning weighing on sentiment. This kept turnover moderate and breadth slightly negative on Thursday's close. Now let's zoom in on SingPost, ticker S08, a key postal and logistics player pivoting harder into e-commerce logistics. The board named Mark Sheng, currently Singtel's Group Chief Corporate Officer, as Group Chief Executive Officer effective November 1, adding a veteran operator with deep tech and transformation experience to lead the next phase. Shares closed flat at 0.425 Singapore dollars before the announcement, a typical wait-and-see response as the market digests leadership change. The near-term focus will likely shift to execution milestones in parcels, automation, and network efficiency under the new chief. Iggy's take: leadership credibility plus operational discipline is exactly what investors wanted post-2024 governance saga. Watch for a refreshed roadmap on cost to serve, cross-border lanes, and cash conversion in upcoming updates. Another one to watch is Capitaland Integrated Commercial Trust, ticker C38U, Singapore's flagship integrated commercial REIT. The manager said CMT-MTN issued 300 million Singapore dollars of fixed-rate notes under its $7 billion EMTN program, maturing September 27, 2032 at a 2.25% coupon, placed with institutional and accredited investors. Units ended 1.3% lower at 2.26 Singapore dollars before the announcement, a move likely more about broader rate and valuation pressures than the paper itself. The key here is tenor laddering and funding visibility into the 2030s, which supports portfolio stability. Iggy's take: in a world where real rates and credit spreads still matter, pre-funding at long tenor and modest coupons helps smooth refinancing risk. Keep an eye on gearing, interest coverage, and near-term expiries in the next quarterly pack. Wilmar took center stage after Indonesia's Supreme Court overturned prior acquittals in the 2021 to 2022 cooking oil export permit graft case, with the Attorney General's office seeking 11.8 trillion rupiah in compensation plus fines. Wilmar says it respects the decision, but maintains actions were compliant and in good faith. The counter closed down 0.7% at 2.89 Singapore dollars before the news, with risk now shifting to the scale and timing of financial impact as details of the ruling and enforcement steps emerge. Headline uncertainty may weigh near term until there's clarity on awards and potential recoveries. Iggy's take: model scenarios on cash outflows and balance sheet buffers, track any ring fencing, insurance, or appeal-like remedies, and watch Indonesian operations margin cadence in upcoming quarters. Siong subsidiary accepted JTC's offer to lease a 61,297 square meter site at Sungai Kadut Street. One to build a new headquarters, warehouse, and distribution center, over 2.5 times the land area of Mandai Link, with capacity to support about 120 supermarkets and advanced automation. Shares finished up 0.5% at 2.11 Singapore dollars as investors welcome logistics scaling that matches its steady store add plan of roughly 3 per year over the next decade. Improved throughput, temperature zones, and processing can support margin resilience. Iggy's take: this is a classic moat builder move. Scale logistics, lower unit handling cost, and raise fill rates. The capital expenditure will be chunky, so track payback via shrink, labor productivity, and distribution center utilization over time. Pulling it together, today's theme is funding and fundamentals versus legal and leadership catalysts. CICT's long-dated notes underline balance sheet discipline. Wilmar faces headline and legal risk. Siong is investing to scale defensible logistics, while SingPost resets with an operations-focused leader. The crucial takeaway: execution quality is the edge in this tape. Cash flow durability, refinancing visibility, and operational moats matter more than ever as macro noise persists. This favors REITs with staggered debt ladders and consumer staples with scalable supply chains. Actionable lens: maintain diversification across defensives and cash compounding names, stress test holdings for legal or event risk, and prefer issuers showing proactive funding and cost control. Align portfolio weights with balance sheet strength and near-term catalysts. That's the scoop for the SGX today, Friday, September 26, 2025. To get real-time analysis and early heads-ups up to a week ahead, join the premium membership. It's just $3 a month and designed to deliver practical, time-saving signals straight from the desk. Like, share, and drop thoughts in the comments. Every comment gets read, and many shape the next digest.